Good morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're taking a look at that lone member of the energy sector on the Trinidad and Tobago Stock Exchange. Of course, we're going to speak a bit about the very important Trinidad and Tobago NGL or TTNGL. For both its financial performances ended fiscal 2022, which would have been a much delayed audited financial report, as well as the 6-month update as at the half-year point of 2023. Now, it would have come across as particularly concerning to investors as to why the audited financial statements would have taken so long to be published. And of course, equally importantly would have been the absence of any dividend announcements, even up to the half-year point. Let's take a look at what would have driven some of these responses, or at least these announcements, and what investors might expect in the coming months ahead. Now, turning firstly to their full year 2022 audited financial results, TTNGL would have posted a loss per share of $2.56 compared to earnings per share figure of $2.97 in the prior comparable period. That earnings figure would have been, of course, restated given certain material accounting changes that would have taken place during the course of the audit period. Now, total income driven primarily by its share of profits from its investee company, Phoenix Power Gas Processors Limited, or PPGPL, would have actually come in at about $168.3 million, just about 13% below the $194 million recorded in the prior comparable period. However, that impairment reversal from some fairly significant changes to accounting approaches and valuation models would have led to an impairment reversal, of course, of that, or impairment loss rather, of $562 million compared to a reversal in the prior comparable period of fiscal 2021 of $267 million. Ultimately, that loss after taxation, considering both the total income figure as well as that impairment loss or impairment charge, would have come in at just under $400 million loss compared to a $459 million profit after taxation in the prior comparable period. Now, some of the major changes or drivers which would have led to this change in fortune for PPGPL and TTNGL rather, would have been firstly that change in the valuation model of PPGPL, which would have led ultimately to that non-cash impairment charge. Some of those valuation model changes would have been a wholesale change in the valuation model from a so-called value in use model to the fair value less the cost of disposal model, so an accounting change there. Many of the inputs would have also led to that impairment charge, including the introduction of a decommissioning cost, as well as the changes in treatment of how some of the service contracts or revenue contracts would have been accounted for in prior comparable periods. Feedstock cost increases away from the accounting changes would have led also to a significant deterioration in PPGPL and by extension TTNGL's performance, with a sharp increase in feedstock costs coming towards the latter end of the fiscal 2022, as well as some unplanned as well as fairly significant maintenance programs, which would have led to significant planned downtime both locally and within the foreign asset base of PPGPL, and ultimately affecting the performance of TTNGL. At the half-year mark, well, the performance did not really get that much better. The group would have recorded an earnings or loss per share actually of 2 cents as at the 6 months of 2023, compared to earnings per share of 76 cents per share as at the half-year point of 2022. That share of profit from joint venture would have swung from a gain of earnings of $118.4 million at the half-year 2022 period to just about a loss of just under $2 million at the half-year point of 2023. Now, overall, that loss after taxation, again, not very good reading for TTNGL investors, swinging from $117.5 million in profits after taxes at the half-year point of 2022 to $2.76 million loss at the half-year 2023 mark. When we take a look at some of the operating environment drivers, we can see that certainly NGL's prices or natural gas liquid prices have been coming down on account of changing demand dynamics because of generally warmer than forecast weather during the reporting period. We can see, for example, that butane and propane in those blue and green columns would have been down close to 30% or 40% actually, and natural gasoline would have been down close to just about 40% as well. Now, when we take a look at NGL production and exports within the domestic setting, we can see also that production over the forecast period or reporting period of January to May 2022 versus the latest available data from Central Bank or the Ministry of Energy rather, January to May 2023, we would have seen a roughly 26% decline in production volumes, moving from 2.49 million barrels to 1.84 million barrels over the period, as well as in terms of exports, 36% or decline, moving from 2.37 million barrels to just about 1.51 million barrels. Again, that seasonality effect, warmer than expected weather, all playing a part in terms of those overall export volumes, and production volumes have been challenged by the current state of domestic gas production overall within the Trinidad and Tobago energy landscape. Now, that has led, of course, cumulatively to fairly significant uncertainty in TTNGL's earnings. And we can see, if we look at that bright green column over the past couple of fiscal years, that the earnings has been fairly unpredictable. In fiscal 2018, when the production environment was much better, the group would have recorded an earnings per share figure of about $1.63. That would have fallen in fiscal 2019 to 84 cents. Moving into 2020, of course, COVID affected in terms of energy market prices down to 4 cents. Some fairly significant improvement in fiscal 2021, again with our impairment reversal, moving to $2.97. And finally, in fiscal 2022, with that significant impairment charge, swinging to a loss of $2.56 cumulatively for fiscal 2022. That has led to significant dividend volatility as well for TTNGL. In fiscal 2018, for example, cumulative dividends were $1.50. That fell as low as 5 cents in fiscal 2020, and for fiscal 2022, just an interim dividend of 35 cents per share was declared. Nothing yet in terms of final dividend as well as an interim dividend for fiscal 2023. To date, however, it should be noted that TTNGL does have cash resources of between 75 to 78 cents per share on their balance sheet, and would need to get certain accounting or certain shareholder approvals in place before being able to declare a certain dividend, given the drastic changes to their financial position coming out of those accounting changes. So at a price of $15.01, well, the dividend yield is zero and the price earnings ratio is negative, so not applicable for TTNGL. There's no major comparable company on the Trinidad and Tobago Stock Exchange to compare it to, but on the basis of those evolving demand dynamics, which could keep pricing for its products somewhat pressured in the near term. Those feedstock costs, which would have surged in terms of increases over the past couple of months, well, we wait to see if that will be moderated in the coming months ahead, leading to margin challenges to its operating and profitability margins, as well as earnings volatility and dividend uncertainty. Bourse is going to place an underweight rating on TTNGL for the time being. Well, that's it for this week's edition. For more information, you can give us a call at 226-8773 or to Bourse. Email us at invest@boursefinancial.com. And of course, you can check out all of our research absolutely free on bourseinvestment.com, our website. And you can catch this article in today's business section of the Trinidad and Tobago Guardian newspaper. Until next time, this has been the Bourse Report. Stay safe and happy investing.